This is a short walkthrough of my read of the 5-minute chart of the S&P 500 futures trading session. We came into the session with a big gap up from yesterday's close, and right away the bulls made their presence known with a bull spike up on bar 4. The bears responded with a two-legged pullback on bars 8 and 14, and I started watching closely for a potential second entry buy, a double bottom bull flag forming right at the range low. My main concern at that point was how far price was sitting from the 20-period exponential moving average. Bar 15 printed as a third consecutive bear bar, and that took some of the excitement out of the long idea. I needed to see strong rejection at the exponential moving average, but instead, the bears showed real strength. They pushed right through it, printed another solid-looking bear bar below the exponential moving average, and broke the low of the day. 4 strong bear bars in a row, not easy to buy against. Bar 18 gave us a very weak buy reversal bar that closed below the exponential moving average, which wasn't encouraging. Bar 19 was actually a great follow-through bar for the bulls, but I still wanted to see a second entry buy before committing. That steep bear leg down had been strong, and my expectation was that we'd see a second leg down before anything sustainable developed to the upside. The bulls did manage to climb back into the range, and bar 23 offered a weak high 1 buy signal, but it closed way too high up inside the trading range to be a comfortable entry. Then on bars 27 and 28, the bears got their second leg down. I watched to see if we could get a clean bull bar as a second entry buy, but we were sitting right in the middle of the larger range, and that's not an ideal place to be a buyer either. It had been a very tricky morning for me to find an entry for a swing. On bar 31, I started looking for a bear trap. The bar didn't close perfectly, and it had an upper tail, but I decided to take a chance on it, expecting a second leg up for the bulls, back toward the top of the range. I took one contract off at plus 5 points. Then prices started to stall right at the previous highs, and when they pulled back a little, I took the second contract off at break-even. The fill wasn't great, and the trade ended with only a very small profit. But that was okay, it wasn't a great trade to begin with. In hindsight, the trade would have hit my initial target after that small pullback, but I wasn't comfortable holding it. I had been buying fairly high in the bigger range, my signal bar wasn't all that strong, and I was genuinely worried that sellers would show up at those levels. As it turned out, bar 38 printed as a big bull surprise, a huge bull bar, and bar 39 followed with another big bull bar, though it closed with a large tail on top. That move did push prices up to the measured move of the opening range. From there, price formed a smaller trading range just below that measured move level. The exponential moving average was slowly being dragged back up toward price, and I was watching for a potential multiple test setup at the range low. The overall bias was leaning more bullish to me. We were above the exponential moving average, and the bears really hadn't made a convincing attempt at a reversal, even with price stalling out. We never got a clean signal bar for a long at the range low on bars 54 and 55, and price went very sideways for a long stretch, struggling to get past the midline of the range. The momentum dried up almost completely after that, with lots of overlapping bars, not great for stop entries or swing trading. Price did crawl slowly higher and eventually tested the bar 39 high of the day, but getting there was a grind. Thanks for watching. If you liked this video, don't forget to like and subscribe to the channel.